The outlook is a little bit more cloudy. What do you see going into 2024?
Top line, we guide for a 4 to 8% growth rate, which is still high compared to our markets. We are planning again to win market share. And we are guiding our earnings per share to 10.40 to 11, which is something between a little bit shy of 6% to up to 11 growth. So this is in line with what we are projecting, and we are very confident that we can have another great year. We are working from a very, very big record high order backlog of 111 billion, which keeps us going to the next fiscal year. And yet there are different kind of sentiments in the regions. But due to our global footprint and our local presence around the world, we're very well equipped to really take the opportunities we have in all the regions.
And I want to go around the world with you, if we might. So in China, last time we spoke, you said there was quite a pronounced slowdown going on. Today, is the situation in China, is it better, is it worse, or is it more of the same? And what do you see next year?
So we stay tuned in China, put it that way. So China is still a weak market, several reasons. You know that the private consumption is not picking up. Obviously, as a major exporter, they're also having a drawback by the weak economy. So what we are looking closely into, let's say, the start of the calendar year. So we believe in the second half of the year, there will be momentum, eventually after Chinese New Year. The government is very well aware that they have to defend their operating model and making their industry more competitive with technology. They talk about high-tech manufacturing, and this is where Siemens comes into play. We are there with our software, automation, hardware, and electrification portfolio to support the companies, and it's about 350,000 small and medium-sized companies to really step up with new technology. So we are looking very closely. China will be a decisive element in the equation.
And another decisive element will be the United States and the Inflation Reduction Act. You've spent more money there. I'd like to understand from you, when you look at running such an important and global industrial business, where in the world do you find it right now the most friendly place to do business? Is it the United States?
I mean, obviously, the United States would be definitely amongst the top of the list. We have the Inflation Reduction Act. You know that we recently invested twice. Number one, in the East Coast with a more than 200 million investment into a rolling stock manufacturing plant, thanks to the great order intake which we got from Amtrak and other customers there. And number two, investment of 150 million in Dallas, Fort Worth, which is all about electrification. There's a massive amount of data center build, driven obviously by large language models and AI. So therefore we are in the game there. We are very much localized. We have 45,000 people there. And the demand for our technology, is it in automation, digitalization, or electrification, is very high. And indeed, the United States makes it easy to invest.
Which brings me to your home market and where we're speaking from now, in Germany. You know, there's a lot of talk about the German economy, this sort of refrain about the sick man of Europe. What is your experience of the German economy right now? I'm looking at the orders in the fourth quarter, very strong. What is your experience of the German economy?
Well, I mean, we have the big discussion about high energy prices, and that's a fact. And therefore, the government is working on supporting some energy-intense industries. For me, the point is we have to play our strengths in Germany, which is innovation, innovative. We have very, very strong small and medium-sized companies. We have strong ecosystems around healthcare, around chemicals, automotive. So we are working with our partners, with our ecosystem, on really making them stronger in using technologies. Our strengths, Germany's strengths, is innovation, bring technologies to the market. This is the reason why Germany is also an export country. We have very, very strong small and medium-sized enterprises. We have very strong large companies. They have to build their ecosystem and bring it to the future.
It happened this week with the government, the courts ruling against the 60 billion euros, which is going to be really dedicated to exactly what you're talking about, right, to that transformation of the economy. Do you think that that is a harmful development for the German economy?
So, I mean, number one is, in times of transformation, there's one more element which is of essence, which is speed. We have to really gear up our speed and execute exactly along the agenda what I have been talking to you. So this is, of course, a setback because the financing was ready to go. Now the government has to work on a plan B, how to really focus then on the right things to do, which should be future-oriented and really putting money in our innovation strengths. So that's what we hope. So speed is of essence, and therefore we are looking very closely how can now the government turn it and bring the right focus to what really matters.